Okay. Thank you very much for turning up for this afternoon session. Our focus is going to be on income statement, as you had requested last week. I know that you have gone through all this. You have covered the majority of these concepts. So we are just going to be here to make a look through, just a revision. You ask questions here and there, maybe perhaps where you did not grasp the concept very well, so that by the time we end this session, you would have gotten enough clarification and be in there for an exam. It is going to be an interactive session. Much of the talking will be done by you, just as we did last week. And my role will be just to supplement on what you think and to clarify. So without wasting any time, I want a volunteer to come up and give us an opening prayer. Any volunteer, you carry up the hand and give us an opening prayer, and then we start off immediately. I see Michael's hand is up. Are you giving us an opening prayer? You unmute yourself and give us an opening prayer. Okay. Any other volunteer? I think Michael is not on. Any other volunteer to give us an opening prayer, and then we start off? I have Lucy here. Okay. Unmute yourself. Okay. There is, I don't know how I should pronounce your name. Okay, Splash. Splash, give us an opening prayer. Is off. Any volunteer, just unmute yourself and give us opening prayer. I'm seeing at FH. Abraham. Okay. I think people are not ready to pray. Perhaps you. Okay, Emmanuel. Emmanuel, unmute yourself. Somebody is saying the settings can't allow them to unmute. Let me make the corrections, some adjustments here. Okay. It's fine now. Emmanuel, I see your hand up. You can now unmute yourself and.
Okay, let's pray. Thank you, Lord. Okay. Hello.
We are able to hear you. Please pray. Emmanuel, we are hearing you.
Okay, let's humble ourselves. Okay? Oh Lord, we thank you for the gift of life you have given us. We thank you, our teachers. Oh Lord, help us such that we can understand what that is going to teach us. Oh Lord, give us a stable network so that we are able to learn In the name of the Father, and of the Son, and of the Holy Spirit. Amen.
Amen. Thank you so much, Emmanuel, for volunteering to pray for us and letting the session begin off. I see some people in the comment box are asking which subject. You must be aware by the time you tapped on the link, this is entrepreneurship education. And if you were confused, then we have now let you know. Like as I earlier said, it is going to be an interactive session. I am going straight up. Okay, this one who is talking. Okay, I'm going straight away to final accounts. Final accounts is what we refer to as the income statement. Of course, final accounts, like we have written here, we have said these are financial statements usually prepared at the end of the trading period. We all know that there are three kinds of financial statements that we have. We include the trial balance where we extract the information, but the most important financial statements is the income statement, the one you call statement of comprehensive income. Some people call it trading profit and loss account. Then another category of a financial statement is what they call the balance sheet. We all know that of the three financial statements I've mentioned, a trial balance followed by an income statement, and then lastly the balance sheet. The role of the trial balance is to give the arithmetic accuracy of the relevant financial accounts. Then when it comes to an income statement, we're also going to go through, but the major aim of an income statement is to determine the net profit of a business. We all know that when one engages in a business, the major aim is to get profits. And the only document that can assist you to identify that is what we call an income statement. That income statement you see is sometimes subcategorized into two. It is divided into a trading account and then profit and loss account. That's why we call it a trading, profit and loss account. The role of a trading account is to establish the gross profit of a business. When we talk of gross profit, it means we haven't yet subtracted the expenses. Very many people conduct business. Somebody puts in capital. Let's say you have carried on a certain business, you put in a capital of 2 million. At the end, you see yourself having sales of 3 million. Meaning, if you injected in 2 million and you're seeing in the safe you have there 3 million, it means the difference is 1 million. Majority of the people get excited with that and they say, I have made a profit of 1 million. But in actual sense, that is just gross profit. The real net profit is got after subtracting the expenses from that 1 million you are jubilating. Remember, in the due course of making that 1 million, you incurred some transport, you were having some meals, some expenses of electricity, water, etc. So we have to subtract off all that taxation, then we get the real net profit that the business made. So an income statement, as I've said, it has a trading account whose major aim is to look for gross profit, and then it has a profit or loss account whose major aim is to look for net profit or net loss, of course. I'm not dwelling so much on loss because the major aim of a business is to make profits. Though the business can make gross loss, it can make gross profit, it can make net profit, it can make net loss. And then we are going to look at the balance sheet. The balance sheet, the major aim of a balance sheet, of course, is to show the financial position of a business as at a given date. It keeps on checking on assets and liabilities of a business to see whether things are balancing up or not. You see, in a business, when you see liabilities are in excess, just know that it is heading towards insolvency or bankruptcy. It's most likely to close up. So we shall go through a range of things in today's session. Shall not dwell too much on theory. I think we shall go straight forward to the calculations. However, we shall have a brief background, and I want a volunteer to, if you're able to see this, you just go through this content before we go to the real calculation part, because we need the orientation of where we are coming from before we enter into the actual calculations, so that we don't leave some people behind. We want to move together. If you're able to see the screen, I'm starting with Vincent. Can you read for me there?
Okay. Final accounts. Final accounts are financial statements usually prepared at the end of the trading period to determine the profits made or losses suffered by the business and the final position of the business has at the end of a given trading period. The financial statements prepared by the profit-making organizations include the trading account, the profit and loss account, then the balance sheet. Then reasons for...
Pause a moment, then before you continue. In our definition of final accounts, we have stated it clearly that these are financial statements and they are prepared at the end of the trading period. The trading period we mean in this case is usually a year when it comes to a trading profit and loss account. They are prepared at the end of the year. That cycle is what we call a trading period. And then with the financial position, in this case, we are talking about the balance sheet. It's the one which is responsible for looking at the financial position of a business at a given period. And the balance sheet can be prepared monthly in a business. Unlike an income statement, or the one we call a trading profit and loss account, which is prepared at the end of the trading period, that does around a year, almost a year. But with the balance sheet, you have to maintain it monthly so that you keep checking on how the business is performing. So here we are saying for profit-making organizations, we all know that there are businesses which are opened up, but they are not for profit. They are non-profit organizations. Now, for us, we are looking at profit-making organizations. In financial statements, they maintain what they call a trading account and a loss account. Though we have separated them here, but we are supposed to prepare a joint one. Most of the questions you do receive asks for a joint statement, and that's a trading profit and loss account combined, the one we call an income statement or statement of comprehensive income, and then a balance sheet. So when they ask you the financial statements, don't say that we have trading account, we have the profit and loss, we have the balance sheet. The trading account and profit and loss is one, it's combined. And then number two is balance sheet. And then also we have what they call a trial balance, the one we begin with before preparing all this. Can you just sum 2-3 points? The reason is as why we prepare these final accounts. Why do we prepare an income statement? You can continue and read for us. Are you online? Okay. Jonathan?
The reasons for preparing financial account. Reasons for preparing final account. To determine the gross profit or gross loss made by the business. This is through preparation of the trading account. To determine the net profit or net loss made during the trading period through preparation of the profit and loss account. To determine the financial position of the business at a given day. To compare the performance of the business over a given period of time. The
Very
trading
good.
account. This
So
is
we
a
have seen the
financial
reason.
statement.
Okay, a moment, pause a moment. We have seen the reason final. And in this case, we have said our major aim is to identify the gross profit or gross loss made by the business, and the document responsible for generating gross profit is what they call the trading account. And then to determine net profit or net loss, the document responsible for that is a profit and loss account. And therefore, in a business, you cannot prepare a profit and loss account unless you have prepared a trading account. That's why an income statement, what we call income statement, combines all of them. In the same column, you will find their trading account. After getting gross profit, they just proceed with generating the net profit or net loss combined. Then to know the financial position of the business, that is again a balance sheet. It's the one they are talking about. And then to compare performance. When we talk of comparing performance as a business, you can use the income statement to know that last year I made this profit. This year I've made this. The other previous year I made this profit. Therefore, I am either progressing well or I'm not progressing well. And then you establish reasons as to why you are performing so. Okay, then let us start with the trading account. If you are preparing a trading account first, whose major aim is to generate gross profit or gross loss, how do we, okay, somebody to read for us that content briefly, who has not said, okay, Lenny. I think Lenny is off. Okay.
Good afternoon.
Good afternoon to you.
From the trading account, yeah. This is the financial
we are
statement prepared at the end. This is the financial statement prepared at the end of the trading period to determine the gross profit made or gross loss suffered by the business. Content or components of the trading account. Sales. These are goods sold by the business during a given trading period. It is the income received by the business from the goods sold. This can also be called turnover. Purchases. These are goods bought by the business for the purpose of reselling them to earn profit. Stock. These are not yet sold goods in the business. It is the money value of goods held for sale. Stock is categorized into two, that is, say, opening stock and closing stock. Opening stock. These refer to goods that the business starts with at the beginning of the trading period. These are goods in the business. These are goods in the business before any purchases are made in the trading period.
Okay, thank you. Let us first pause there, then we shall continue. Somebody is saying the volume is down. I don't know whether you are able to hear me now. Those who are saying the volume is down. Like we have said, the major aim of a trading account is to generate what they call gross profit or gross loss. Now, I'm taking an example of like a simple business. I don't know. Let me go to people who fry the chips. If you fry the chips, assume you got you have gotten with you 10,000 shillings, 10,000 shillings, and you want to start a business of frying and selling chips. Of the 10,000, you go and buy 2 kilograms of Irish. Each kilogram, they sell you at 2,000, coming to a total of 4,000 shillings. So you buy Irish of 4,000. You go and buy cooking oil of 4,000. And then you go and buy, let's say, charcoal of 1,000. Irish, 4,000. Cooking oil, 4,000. And then Irish, charcoal, 1,000, giving us a total of 9,000. Remember, you have capital of 10,000. Then the balance of 1,000, we are still remaining the balance of 1,000. You go and in fact, you pay the person who brought you these things. Assume we sent a person to go and bring us these things. We pay in as transport. So 4,000 Irish, 4,000 has been put on cooking oil, 1,000 has gone in for charcoal, and then the balance of 1,000 we have given the border man who brought for us these things. Now, after selling your chips, it so happens that you have gotten 16,000. 16,000. Now, when you get this 16,000, remember you put in capital of 10,000. Most people, they just get this 16,000, which is the selling price. They subtract the 10,000 they injected in, and then what remains? Not necessarily the 10,000, the 9,000. They don't count transport. They only count the Irish. Somebody will tell you that, you know, I just put in Irish of 4,000, cooking oil of 4,000, and then charcoal 1,000, and I was able to make 16,000. So when you ask that person, what is the profit that you have made? Somebody will say, I've made a profit of 6,000. This 6,000, the person is saying, this is what we call a gross profit. The real net profit, we get the 6,000 you are saying you have gotten, subtract the transport, the 1,000 you gave to a border man. So what remains is 5,000. This 5,000 becomes our real net profit. So the word gross means total profit, meaning the trading account aims at getting the gross profit, whereas the profit and loss aims at getting the net profit or net loss. I don't know whether you are able to hear me. Somebody is asking me that why don't we count transport? That why don't we count transport? Now, at the beginning, I am just going in for a lay person. People who do business there down there in the village, for them, they usually forget that even the transport they put in was part of the investment they made in the business. Somebody will just tell you that I bought this sugar cane at 8,000. If you ask that, how much did you buy this sugar cane? 8,000. Remember, he gave a border person to deliver this sugar cane to the selling point and gave, let's say, that person 1,000. Meaning in total, this person has injected in 9,000. Now, when you sell sugarcane of 8,000, and then you get, in January, you get 12,000. Most people just get 12,000, subtract the 8,000 they used to buy the sugarcane, and the balance which remains of 4,000, they declare it as profit. But in actual sense, this is not just a profit, but it is what we call a gross profit. Now, to get the real profit you have made in a business, get the 4,000, which is your gross profit. Go ahead and subtract the other 1,000 you gave the border man to deliver these things or to deliver the sugarcane to the selling point. That 1,000 is what we call expense. That's why we say to get net profit, we get gross profit minus total expenses. The expenses you incurred. You see, expenses are not part of the stock you have, but you cannot avoid them, expenses. In fact, without them, business may not go on well. For example, if you say that you're not going to transport your sugarcane you have bought at 8,000, then how will the sugarcane reach the selling point? So you can't avoid these expenses in the business. But then business people just subtract what they did in buying stock, and they subtract from the general sales they have made, and they declare it profit. But in actual sense, that is gross profit. The real net profit is get the gross profit, subtract the total expenses, you will get the net profit, or you get the net loss, depending. If gross profit is less than the expenses, then you will go in for a net loss. Unless if you have a question before we proceed. But if there is no question, then we go ahead and see how the contents which are included in the trading account. When you're preparing a trading account, there is what we call sales. as one of the members read here. Okay. Nyakato, do you have a question? You unmute yourself.
Good afternoon, teacher.
Good afternoon to you.
I was kindly requesting if you could share the PDF you're sharing.
Okay, that one we shall do it at the last moment. For now, I think we shall do it last. Now let us first engage. Okay, thank you. The components of a trading account. What are the things you consider when you are preparing a trading account? Every business opens up, it sells. Every business that opens up, it buys. You can't sell what you did not buy. Meaning, in a business, we buy, in a business, we sell. And after buying, before you sell, you keep them. That's what we call stock. So the business buys stock. After purchasing stock, it sells. Those are the key things we are going to rotate on in this case. So in preparing a trading account or an income statement, because this is also the very first step, someone is asking a question here. That if at all, after subtracting the expenses from the gross and you remain with nothing, what do we call that? Okay. If you subtract expenses from gross profit and you get the answer 0, 0, let's say, then you can't call that one a net loss. And you can't call that one a net profit. Now, instead, you will say net profit stroke loss. Put those two terms, net profit stroke loss. Otherwise, in standard business recognition, if somebody subtracts expenses from gross profit and remains with nothing, we call that one a normal profit. It's not abnormal, but a normal profit. So what you put in is what you have been able to get. Now, going back to our components here, we are saying sales, and sales we are saying these are goods sold by the business. Some people call sales as turnover. We have what they call purchases. These are goods bought by the business. We have what they call stock. You have bought is what we call stock. And we have said stock is subdivided into two. It is subdivided into two. We can call stock as opening stock, the stock you begin with the business, and then there's also what they call closing stock. Closing stock, these are goods, unsold goods at the end of the trading period in the business. Things that remain unsold at the end of the trading period. I earlier told you that a trading period in this case is usually a year. A year doesn't necessarily mean from January to December. It can be from September now up to September of next year. That is a trading period. So things you start with right now in September, a new trading period, we call it opening stock. Then the materials that close up September next year, 30th of September next year, we call that one closing stock. We have terms like returns, and returns are subcategorized into two. We have, okay, in definition, we say returns, these are goods returned by the business to its suppliers or by the customers. We all know that it's unavoidable when you're in business. Automatically, there are things you will sell to your customers, and because of some other circumstances, they will bring them back. Maybe they were broken, they were wrong color, you gave them things that they did not ask for. So customers will return these things back to the business. When they return to you, we call that one return inwards. Things are brought back to the business, in business. Sometimes we call them sales returns. Equally, you also, as a business, there are things you buy very well, but when they reach your store and you try to check them as you are doing stock accounting and etc., you realize some things are broken, others are of wrong color, etc., etc. You also take them back. When you take them back, you are taking them out of the business. We call them return outwards. They are leaving the business. That's why we are using the word out. Sometimes the same word to mean the same is purchases, returns. The purchases you bought are being taken back. Purchases, returns. Now, when it comes to return inwards, which we call sales returns. You sold the customer things. Of course, when you sell, we call that one sales. It so happens that some of the things you sold, partly a customer has brought them back, the one we call sales returns. Now, this will help us to get the real sales you have made in a day. Let's say you sold a TV set. You sold a TV set at 800,000. At 800,000, let's say, plus a decoder at 50,000. So the sales you have made is 850,000. It so happens that a customer returns a decoder and says, this decoder is not functioning well for me, I don't want it. Meaning, you as a business, you can't say that in a day today I've sold 850,000, yet a decoder has been returned back worth 50,000. So to get the real net sales you have made in a day, we shall get the 850,000 they had given you earlier, subtract 50,000 for the decoder which they have brought back in the business. What you remain with is 800,000. Now this 800,000 becomes your net sales of the day, the exact sales you have made. So you can't continue generalizing and saying, I made sales of 850,000 today, even when they have returned your decoder or worth 50,000. Does not make sense. So you get 850 they gave you in the morning, subtract the 50,000, what remains 800,000 becomes our net sales. That's why return inwards helps us to generate what they call net sales. But in a business, when no customer has returned the things you sold to him or her, then we use sales direct. There's no need of looking for net sales. We only use net sales in trading profit if there is a customer who returned the things back. Equally, on return outwards, you also, if you bought things worth 2 million shillings, and when you reach home, your retail shop, you try to check out some things, you find there are 3 dozens of plates which are of wrong color. It's not the color you wanted. And those plates are worth 200,000. You bought things of 2 million, but the plates are worth 200,000, which are of wrong color. Therefore, you take them back. When you take them back, those people are supposed to give you your 200,000. So when they give the 200,000, if I find and ask you that you bought things of how much today, you can't say that I bought things of 2 million. No. Instead, you will tell me I bought things of 1,800,000. Why? The 2 million you had bought earlier, they gave you back your 200,000 for the broken or for the wrong color of the dozens of plates they had given to you. So we get what they call the net purchase, the real net purchase you have had, the things you have bought. Get the ones you bought, remove the amount for the ones you have taken back, and what remains is what they call net purchase. There are words like carriage. Carriage, these are costs incurred in the transportation of goods in the business. And they're also subcategorized into 2. There is what they call carriage inwards, and there's what they call carriage outwards. As the word goes, carriage in. Carriage is like to transport. Carriage is like to transport. Now, if carriage is like to transport, I'm saying transport inwards, carriage inwards. I bought the things, those are called purchases. I then transported them. Meaning, when I reach the business, I must add there that money I incurred maybe on transport to transport these purchases to my store where I sell them from. So when I'm setting the price for my stock, I must get the total purchases. I add on the carriage inwards, because that is also another cost you have incurred, and therefore it must be included on your price, and you determine the final selling price that you'll deliver to the customers. Then carriage outwards. Carriage outwards is mostly on sales. Carriage out. A customer has come to buy from you, and after you decide to give that customer free transport. When you give a customer free transport, what we call carriage outwards, it means it will affect your business in terms of expenses. You have incurred expenses. The customer is supposed to transport for himself or herself the goods he or she has bought from the business. But if you decide to transport, then it means that one becomes an expense. There is also what they call wages, and we have said wages are costs incurred in preparing goods for sale. These are also added to purchases in a trading account. People confuse what they call wages and salaries. When you are given wages and salaries as a singular term, wages and salaries, those are typically expenses to a business. But if you are given wages only wages, then wages are added on purchases to get what they call the total purchases. So to get the real purchases, total purchases, take an example. You went to town, assume you are somewhere, you have a retail shop. You went to town, you bought 2 boxes of, let's say, soap at 60,000. Let's say, I'm just assuming 2 boxes of soap, 60,000. Then you never had your own means of transport. You got a border man and gave him 2,000 shillings to take these things to your shop. That 2,000 now is what we call carriage inwards. It's carriage on purchases, what we call carriage inwards. Now, you have added on transport of 2,000. Then you reach home. When those things reach where you are taking them, yourself, you cannot offload. Here comes these other people and say, let me help you to offload and carry. You give me some 1,000. They help you to offload those boxes and you pay them immediately that 1,000. Now the 1,000 becomes a wage. You have paid the person for the service as rendered there and then. So you bought at 60,000, which are purchases. You have put in transport of 2,000, that's a carriage on purchases or carriage inwards. And then you have paid 1,000 for a person who helped you to offload, the one we call wages. Now, if I ask you that how much did you buy this soap? Okay, what cost did you incur in making these boxes of soap move from town up to where they are now? You can't say that 60,000, it will be a lie. Instead, it will be 60 plus the 2,000 for transport plus the 1,000 of wages, which brings us to 63,000, meaning our total cost on purchases, the total cost we have incurred on buying these boxes of soap is 63,000. This helps you to determine the price at which you are going to sell the people. You have heard of a circumstance where you go to a retail shop and they tell you that, you see, the price we are selling this item at this price because even as we incur high costs in transport. Those high costs in transport, they are trying to tell you that that is carriage on purchase or carriage inwards, and they have just shifted and added them directly to the total purchases, the purchase price. Now, having gotten purchases 60,000, 2,000 for carriage inwards, and 1,000 for wages, giving us a total purchase cost of 63,000. You may open one box. You may open one box of soap and you find that you ordered for White Star. They have given you one box which is containing blue. I don't know whether it's Blue Star or blue soap, whatever the case. Meaning you have to take that one blue box of soap back. When you take it back, that one is called the return outwards. And if it was worth 30,000, if you take it back and they give you 30,000 in cash as a return in money, then the real net purchases will be the 63,000 minus the 30,000, and then you get 33,000. The 33,000 remains our net purchases. Vincent, do you have a question?
Yes, sir. So I'd
Okay.
like you to throw more light on the wages because I'm getting confused. I have been always putting it under, I think, wages and the salaries, because I've never found a question on that one. So I want first to throw more little light on it.
Okay. Now, Vincent, if you find a question which says wages in details given, they have just said wages and they have given a figure. Those wages, don't take them under expenses. Instead, add them on purchases. Because wages were just maybe incurred on offloading while you were bringing the things to your store. Remember, there are people who buy merchandise in large quantities. You bring, let's say you have a hardware. You go to town, purchase the things from the factory, you bring them at your hardware, you have incurred your own transport, the one we call carriage inwards. Again, you reach there, there are some boys who help you to offload the cement and iron sheets and what, and then you also pay them. Those are wages. But when you find wages and salaries combined, if they have given a single word, wages and salaries, then don't add on purchases. Instead, you will take it under expenses when you are determining for the net profit or net loss. So wages, once you see wages only, wages, that's when you go and add on purchases, because this is now just common sense. You realize that when you buy something, you have put in transport, people have helped you to offload and take to the store. When you are determining the price, you have to add all this money, the money you used to buy the item, add the money for transport, add the money for offloading, then you determine the price at which you are to sell each product so that you also make a profit. You can't just determine the price basing on the money used to buy the item or the stock. Yet for you have incurred transport, the one we call carriage inwards. You have also incurred a cost on wages, paying some people, the one we call wages. Lawrence?
Yes, sir. My question is, what if you get a question and you are given carriage inwards and also you're given wages? What can you do?
Okay. If you are given carriage inwards and you are given wages, then, and also you have purchases, then it means we shall get the purchases. Purchases is like the cost, the money you paid for those items. Add there, you will say add carriage inwards. You again say add wages, so that the answer you get is called the total purchases. So we get purchases plus carriage inwards plus wages, and then we get what they call total purchases. Then if you have some things that you returned back, we shall get these total purchases less or minus what they call return outwards. Once we subtract return outwards from total purchases, what we get is what we call net purchases, as we shall see in the table to come. Maybe Muffin?
Sir, I am sorry to take you back, but I didn't understand net purchases properly. Yeah? I was saying, I'm sorry to take you back, but I didn't understand net purchases.
Net purchases.
Yes.
Okay. Okay, it's okay. We are going to have the table there and you'll understand what I'm talking about. I'm going to take you to that table. This way, in fact, this is just a theory part. I was just going through the theory. Then we shall go to that. There's also what they call goods available for sale, gross profit. I think. That means I'm 1 quintillion away from a 6 trillion. Can you please, just give me the 1 quintillion. Come on, I've done so much today. Oh, wow. Frankly, get done. Oh, no. Let me try to bring you back. For you to do this job for me, I make you 6 billion now, okay? You know what to do. Right. Okay. Say, Simeon, you gotta be kidding me. All I need to do is. Whatever moved a little bit. Our file tried to move, but let me try to drag it behind and see until we meet where we are going to see the table. But the aim of a trading account, we first wanted to see how they determine their gross profit. We all know that the formula is sales, or sometimes we say net sales minus cost of sales. But we all know that to get the cost of sales, the formula for cost of sales is opening stock plus net purchases minus closing stock. And we all know that the formula for net purchases is purchases plus carriage inwards plus wages minus return outwards. We only add those things if they are there. If there are no wages, don't add. If we don't have carriage outwards, then also don't add. We only add what is there. Let me first go to where we were. I see some people carrying their hand up. You can be asking your question, Roy.
Good afternoon, teacher.
Good afternoon to you.
So I'm kindly requesting you to repeat the formulas that you were saying.
Okay, I think the formulas are even this content. They are here. If you are able to see this screen, that for example, to get cost of goods available for sale, we say this is the value of goods available for sale during the course of the trading period. If we say that goods are available for sale, these are things that you have, that you offer to your customers. And in this case, the goods you have during the period is the opening stock. The things you started with on first day, add there the net purchases, the things you bought in the due course of the year. That's what we call goods are available for sale. Things you started with plus things you bought during the year, the ones you are calling net purchases. But once you see the word net, to get net purchases, it means there must have been a calculation. That's why they are having net. Net meaning exact purchases. To get net purchases, we have said you get purchases, though this one started by saying minus purchases returns, but the right formula should be we get purchases, the things you bought, plus carriage inwards, that is the transport you incurred on, plus wages. But I'm just using the word transport. If you find the word transport given in a dry balance, that one is the pure expense. Don't come and add it on purchases. We only do that if you are seeing the word carriage inwards. So to get net purchases, we get purchases plus carriage inwards plus wages minus purchases returns. Purchases returns are like return outwards. Things you bought, add their transport, that is carriage inwards, add their people who helped you to offload, maybe that's wages. Then once you get that figure, subtract the things you took back. After you have reached your store and you open, some are broken, others are what, you decide to take them back. Subtract the value of the things you have taken back. The things you remain with in a store are what we call the net purchases. Because you can't just continue saying purchases when there are things you have taken back and they are not in your store. For us, we want to have the exact stock you have with you. And then there's what they call a cost of sales. Remember, our major aim is to get gross profit or loss, whatever the case. But to get gross profit, we have said the formula is net sales minus, it is net sales minus cost of sales. So to get net sales, we earlier said to get net sales, we get sales minus return inwards. The things you sold, subtract the ones they returned to you. What remains is your net sales. To get cost of sales, I've said we get opening stock, the things you started with in a year. Add their net purchases, the things you bought in the due course of the year. Subtract closing stock, the things which have remained unsold when the year has ended. And I think you are seeing the formula here. That cost of sales, sometimes we call it cost of goods sold. This refers to the value of goods sold by the business at a cost price. And we are saying the formula is the cost of sales is equal to cost of goods available for sale minus closing stock. Now, the formula for cost of goods available for sale, up there, it's the same as opening stock plus net purchases. Meaning, instead of coming to cost of sales, and I said the formula is opening stock plus net purchases minus closing stock, I can use goods available for sale, because goods available for sale means opening stock plus net purchases. We subtract the closing stock. Unless somebody has a question here. Godzilla, something of the kind. Okay. Godzilla, you have failed to unmute yourself. Maybe. Okay. Some people are carrying up their hand. ED. ED, ask your question.
Sir, my concern is on the formula for finding net purchases. First, they gave us that it is supposed to be total purchases minus returns inwards.
Total purchases minus return inwards. I think you also, I think in earlier I said we only add there carried in. But if they are not given, then purchases returns. I think I'm very clear on that. I think we only do that.
Sir, I think, sir.
Yes.
I think there are some questions which come when purchases are independent. Just purchases are just there now.
Yes.
Sir. Now, for us, they told us to get the total purchases. We get the purchase plus the carriage inwards plus the wages. Now, to get the net purchases, we get the total purchases minus the returns outwards.
That's exactly what I've been saying. Exactly what I've been saying.
Okay, sir.
Okay. That's exactly what we are saying. You get the purchases, add their carriage in wages if they are there anyway. If they are not there, then add nothing. By the way, there are circumstances where a business did not have carriage inwards, neither is it having wages, even return in outwards are not there. Meaning there we shall have directly purchases. We shall have nothing like net purchases because we didn't have wages, no carriage inwards, no return inwards. There we just get purchases direct. I think let us have the format. Account. I'm going to dwell more on a vertical format. I will not enter into the horizontal format because I know this is the modern way of presenting accounting information. Our vertical format is this one. Hope you are able to see it. I'm not going. Okay. This is the vertical format of presenting a trading account or an income statement, because this very information, it is just a continuation for presenting a trading profit and loss account. Like I said earlier, the major aim of a trading account is to get the gross profit or loss. The major aim of a profit and loss account is to establish the net profit or net loss made by the business. Then the word income statement combines all of them. It combines what they call trading, then profit and loss account, meaning it's the same. Trading profit and loss account has within it a trading account and has within it what they call a profit or loss account. I think this is the vertical format. When we are writing an income statement or trading account, we use for the. We start by the name of the business. Maybe, let me pick one of your name here. Who is here? I want to use one of your name, maybe ED. So we shall say it is, then we go to another line, we say trading account, in case it is a trading account. But if it is an income statement, we say income statement. Then on the third line, we write period, meaning we say for the year ended, maybe 31st December, depending, maybe 31st December 2023. So you always write it in 3 lines. The first line is the name of the business. The second line is the title of the document you are preparing. And in this case, it is a trading account. And then the last line gives us the period. And that is for the month, for the year ended. Don't use as at. As at is only used on a trial balance and a balance sheet. We only use as at on a trial balance and a balance sheet. The remaining, whether books of original entry, the sales day book, the purchases day book, etc., for them we use for the in this case. This is our format. When we enter into use of a vertical format, we have here the heading, you have known how they write. We have here details and other 3 columns. Now, the first column, the role of the first column is to look for net purchases. So don't struggle to put the other things in that first column. First column, its role is to help us get the net purchases. The third column, I'm jumping the middle. The third column, its role is to only help us get the gross profit. And we all know the formula for gross profit is net sales minus cost of sales. So I expect only the 2 things in the last column, the net sales and then the figure for cost of sales. What the answer you get becomes our gross profit or gross loss. Then whatever has not gone in a first column and is not in the last column, then automatically fits in that middle column. Take an example here, the format. We were given sales. We don't know the figure, but we are just looking at the format. I think you are seeing that sales are being written in the second column. We are saying less sales returns. You sold the things and the customers brought them back. That's why we are calling them sales returns. Now, when a customer brings them back, we have to subtract them from the real sales you have made, because you can't tell me that in your pocket you have sold 100,000, yet a customer has brought you a flask you had earlier sold at 20,000. We have to get the real money you have sold in a day. So the 100,000, we shall subtract the 20,000 for the broken flask they have returned back, and what remains, 80,000, becomes our net sales for a day. But in this case, we are looking at a trading period, the net sales for trading period, which is usually a year. So the format is sales less sales returns or return inwards, and then we get the net sales. In the last column, our formula for gross profit, which we are aiming at, is net sales minus cost of sales. That's why we are putting net sales in the last column. Less. Now, when you use these words less, I don't expect you to say less sales returns, and then you come in the amount column here. Again, you put the figure in bracket. That one will be wrong, because a negative with a negative will bring us to a positive. So once you say less here, less sales returns, don't again go and write your figures in bracket. You have already mentioned less. Then the formula for gross profit, as we have said, it is net sales minus cost of sales. Now we have gotten our net sales. That's why we are again saying less cost of sales. The cost of sales is being less from the net sales, so that we get our gross profit. But to get the cost of sales, it is another journey. To get the cost of sales, the formula is opening stock plus net purchases minus closing stock. And you remember I said it clearly that to get goods available for sale, not cost of sales, but goods available for sale, the formula is opening stock plus net purchases. The things you started with in a business, add there the things you bought in the due course of the trading period. Meaning opening stock and net purchases gives us what we call goods available for sale. So another formula for finding cost of sales is by saying goods available for sale minus closing stock. It's just the same because goods available for sale is the same as opening stock plus net purchases. We all get the opening stock. We have put it in the second column. Remember our formula for cost of sales, we have said it's opening stock plus net purchase minus closing stock. Now we have gotten our opening stock. We add there the purchases, net purchases. But to get the net purchases, we said our formula for net purchases is get purchases, add their carriage inwards as you are seeing it here, add their wages. Then the answer you get less purchase returns, the ones we call return inwards. It will give us the net purchases. So that net purchases plus opening stock gives us what they call goods available for sale or cost of goods available for sale. Someone has a question here. First ask before we proceed.
Good afternoon, sir.
Okay, good afternoon to you.
Good afternoon. I was requesting for your pardon on the start of the table because I've not got it.
Come again.
I was requesting for your pardon from the start of the table.
I'm not hearing you very well. From the start of what?
Of the table.
Okay, I think you have just joined in right now. But you have been online, I think.
You have been
because
online.
I started with the theory part of it. I think I started with the theory part of it so that you are able to understand what sales are all about. We looked at these formulas, by the way. Don't cram the table. Instead, understand the formulas which are used to calculate. Once you understand the formulas, then it will become very easy for you to come into this table. Just know that the major aim of a trading account, for example, is to find what they call the gross profit. We all agree to that. That the major aim of a trading account is to look for gross profit or gross loss. But the formula for gross profit is net sales minus cost of sales. That's the first formula you have to know. Then you ask yourself, but how do I get net sales? You say, to get net sales, I get the total sales minus sales returns. Things I sold, subtract the ones they brought back. What remains gives me net sales. And this is what we have tried to calculate here. Then we say that's okay. What of cost of sales? Because we have said gross profit is equal to net sales minus cost of sales. Some people mathematically say it's the same as selling price minus cost price. Now we have known our selling price, the one we call net sales. What of cost price? The one we are calling cost of sales. We are saying to get the real cost of the sales you made, we get now the opening. So that's why we are saying less cost of sales. We are lessing this cost of sales from our net sales because the formula for getting gross profit, it is net sales minus cost of sales. Now we have to less cost of sales. But cost of sales are not on silver plate. We have to calculate for them. To get cost of sales, the formula is very clear. I said cost of sales are the same as goods available for sale minus closing stock. Okay, it is opening stock. There are two ways. You can say it's the same as goods available for sale minus closing stock. But goods available for sale, they are the same as opening stock plus net purchases. Goods available for sale only gives us what they call opening stock plus net purchases. So if cost of sales is taken as goods available for sale minus closing stock, equal I can of sales is the same as opening stock plus net purchases minus closing stock. After all, opening stock plus net purchases gives me goods available for sale. So it's a two-way. That's why you are seeing us now trying to calculate for cost of sales. We are saying opening stock, we have put it in the second column. We are adding their purchases. The reason for adding their purchases, we are trying to establish net. In fact, we are adding their net purchases. But to get the net purchases, we are passing it through these calculations, and they are always for the first column. Issues of determining net profit, it is always done in the first column. And you now realize that to get our net purchases, which I've been talking about previously in the beginning, we get the total purchases, add their carriage inwards, that is maybe the transport you put in, if it is there, if it's given. Add their wages, if it is given. The answer you get is what we call the total purchases. Now, those total purchases, remember, to get total purchases, I've said you get purchases, things you bought, carriage inwards, that is the transport, carrying to the store maybe. Then the total amount, the total cost you have incurred on that stock is what we are calling total purchases. Then subtract what they call purchases returns. The things, so of course you have bought them, put on a truck, they have helped you to offload. After things reach in the store and you are trying to count them, you realize some are not of the right color, they are not of the right weight, and you return the stock back, part of the stock back. Then we have to less it from their total purchases. Total things you bought, less the ones you have taken back. What you remain with in store for sale is what we are calling the net purchases. So purchases plus carriage inwards plus wages gives us what they call total purchases, less purchases returns or returns outwards. Now, once we less that, the answer we get is net purchases, and it's put in the second column. Remember, in our second column, we had already written up their opening stock. Our formula for cost of sales is opening stock plus net purchases minus closing stock. Now, the first column was struggling to get us what they call, the net purchases. But we all know that opening stock, the things you started with, plus the things you bought in the due course of the trading period, is what we call goods available for sale. Opening stock plus net purchases gives us what they call goods available for sale, the things you had for sale in a trading period. Now, goods available for sale minus closing stock. I have liked Colin. Colin has summarized some of the things here. Goods available for sale, we subtract closing stock. Remember, goods available for sale is the same as opening stock plus net purchases. Now we are lessing closing stock. When we less closing stock, what remains is what we call a cost of sales. And our answer, we shall take it directly in the last column. So once we get the last answer in the last column, our cost of sales, we subtract cost of sales from the net sales up there you are seeing in the last column. There we have there the net sales up. We have now gotten our final answer of cost of sales down, and then we are subtracting to get what they call gross profit. Now, that part of stopping on gross profit is what they call a trading account. But an income statement has to go, or trading profit and loss account, we have to go further and get what they call a net profit or net loss. So if we were now to prepare trading profit and loss account, it would be just a matter of and what gross income, we would now less expenses, because every business must incur expenses. You can't just generate a profit without any expense incurred. So once we subtract the expenses, we would get what they call net profit or net loss. Let me now take you to an example maybe. This is, we are still on it, just only part of it, trading account. Hope you are able to see this. They are saying the following balances relate to the books of Mokasa and Sons as at 31st December 2015. I think us read that information. If you have good network, please read us that information if you are able to see. Show up the hand and okay, Vincent.
The following balances relate to the books of Mokasa and Sons as at December 2015. Details, then shilling. Sales, 100,000. Purchases, 40,000. Carriage inwards, 5,000. Wages, 7,000. Sales returns, 15,000. Purchases returns, 13,000. Opening stock, 30,000. Closing stock, 20,000. Then required, enter the information in a trading account. So I think that's all.
Okay, thank you very much. Now, when we go to our solution here, we realize that our sales were 100,000. The things they returned to Mokasa were worth 15,000, meaning the real sales Mokasa made were of 85,000. That's our net sales. What of the cost of sales? Because our formula for gross profit is net sales minus cost of sales. Now we are lessing cost of sales from the net sales. But to get cost of sales, we need opening stock. Our opening stock was 30,000. I'm seeing somebody's hand is up. Coffee. Okay. Coffee, do you have a question?
No, so like I wanted to read, but it's okay.
Okay, you're reading the sub. Others, it's okay. It's okay. Now, we less cost of sales. When you are lessing cost of sales, we realize that our cost of sales, we have opening stock plus net purchases minus closing stock. That's the formula which I've been talking about. Now, our opening stock is 30,000. We add there the net purchases. But to get the net purchases, we get purchases, which was 40, plus carriage inwards, which was 5,000, plus wages, which was 7,000. Who is Badru? You are writing in our work, please. Badru, you are writing in our work. So we get purchases, carriage inwards, we add there, which was 5,000. Add there the wages, which was 7,000. Then we get 52,000. That 52,000 is what we call total purchases. You bought things at 40,000, you put in transport of 5,000. Now you are paying some people to help you carry them, 7,000. So the real price you have incurred on buying these things is 52,000. Norris, you are writing in our work, please. is 52,000. Then our net purchases, to get the net purchase, we shall get the total purchases, which is 52,000, subtract the purchases returns, the things you bought, but then after reaching the store, you returned back because of some reason, which is 13,000. The figure which remains is now 39,000. That's the actual cost that Mukasa has incurred in the purchases that he holds the business. Paul, do you have okay. I thought your hand is up. Then, having gotten that, we now come to realize that opening stock plus net purchase, opening stock is 30,000 plus net purchases 39,000. In the second column now, remember the first column we said it's for getting net purchases. Now the second column helps us to get the cost of sales and generating the net sales. These people who are writing in an hour, please, you should stop it. So our net purchase, when they are added on opening stock is 30,000 plus net purchases 39,000, it gives us 69,000. That's what we call cost of goods available for sale. Not cost of sales, but cost of goods available for sale. Remember the formula for cost of sales is cost of goods available for sale minus closing stock, or opening stock plus net purchases minus closing stock. After all, opening stock plus net purchases is what we call cost of goods available for sale. The things which are there that are ready for sale, things you started with plus things you bought in the due course of a trading period. They are the ones you are supposed to sell. Goretti, you are writing in our work. And having gotten the cost of goods, gotten the cost of goods, let me see here. Let me disable. Okay. I think we have disabled them now. And then we are getting cost of goods available for sale, 69,000. We are now lessing closing stock. Once we less our closing stock of 69, our closing stock of 20, if I'm seeing very well, our closing stock is 20,000. So 20,000 is less from the closing, is less from goods available for sale, and then we get what they call a cost of sales. Remember, to get cost of sales, it's goods available for sale minus closing stock, or opening stock, which was 30, plus net purchases, which was 39, minus closing stock, which was 20, giving us cost of sales of 49,000. 49,000. That is our cost of sales. And to get the gross profit now, because our major aim was to get gross profit for the trading account. Our gross profit, the formula is net sales, the one we call selling price, minus cost of sales. In mathematics, you say cost price. Meaning our net sales was the things we sold were of 85,000. The price at which we sold those, we bought those things, because cost of sales means the cost price, the price at which you sold this, you bought this stock which you are selling. We bought stock at 49,000. We sold it and got 85,000. Meaning our gross profit is 36,000. Terms, your hand is up. Okay. Terms, you have a question? Your network is not okay.
Apart from the
please
origin and wages,
organize your network.
which
Come again.
Mr. Can you hear?
Your network is really Okay.
I was asking about the encouraging words and which other direct expenses can be incurred.
I think just type in the chat room. You type in the chat room because your network is not okay. Namakula?
Yes, teacher. I'm asking if discount received and
Yes.
rent income are added on the gross profit.
You have said what?
Are discount received and rent income added on the gross profit?
Yes, they are added on gross profit. Now that's where we are heading, because here we have stopped on gross profit and we have called it a trading account. There is where we say trading, comma, profit and loss account. Now we want to proceed to profit and loss account so that we now combine them to bring out what they and loss account. At this stage, we're determining the gross profit. Now, to get the net profit, of course, it's just a matter of adding their other incomes, anything received, rent received, commission received, discount received. Those ones are incomes to a business. And then when we add those incomes to gross profit, we get what they call gross income. Once you get gross income, we now less the total operating expenses, the expenses incurred in the business. So after getting the total operating expenses, you subtract them from the gross income, and what remains is either net profit or net loss. There we would have trading profit or loss account. Okay. I think Ratib. Your network is not good.
Your pardon from the calculations, please. I'm begging your pardon for
Your
this part
network
of.
is not good.
Hello.
Yes.
Yes, I'm like you. I'm begging that you try to wrap up with the calculations, because I'm not understanding this area of opening stock, how it came all about.
Were you following right from the beginning? Because
Yes,
we look through those formulas. We are on the formula of cost of sales. That's what we are on. Issues of to calculate for cost of sales. And we say to be cost of sales is the same as opening stock plus net purchases minus closing stock. But to get net purchases, because opening stock is just direct, closing stock is just direct, but we need to calculate for net purchases. That's why you are seeing this first column. This first column is handling struggling to get our net purchases in the first column. And we said to get net purchases, we get what they call purchases plus carriage inwards plus wages, which gives us what they call total purchases of 52,000. Then subtract the things you returned back. Subtract the things. Somebody is asking you that what are you supposed to prepare when they ask you financial statements? If you are following us right from the beginning, we said there are three types of financial statements. There's what they call trial balance. There's what they call trading profit and loss account, the one we are on now. Of course, another word to mean the statement of comprehensive income. And then lastly, there is what they call a balance sheet. So we have only three financial statements: income statement or trading profit and loss account, and finally the third one, balance sheet. Those are the financial statements they have. In your new curriculum, you realize that they won't tell you prepared directly, that they like using the definitions of these financial statements. They can tell you to prepare the arithmetic accuracy, help so and so prepare the arithmetic accuracy, or identify the arithmetic accuracy of the books of accounts. We all know that the document, the financial statement responsible for that is the trade balance. Somebody will tell you to prepare the financial position of the business. The document responsible for that is a balance sheet. Somebody will tell you to determine the net profit of a business. Net profit is determined by preparing an income statement. Sometimes they can tell you to help and determine the gross profit only. If they don't tell you to help and determine gross, it means we only prepare a trading account and stop here, like you are seeing our work here. Sometimes you are given gross profit in the information. They have given you gross profit and they tell you to determine the net profit or loss made by the business. If they have already given you gross profit, then don't enter into issues of sales minus this. Already that one has been calculated. Just start from gross profit, add there some other incomes if they are there, less the expenses and get the net profit directly, because we have seen questions of that nature where gross profit is already calculated. They have given it to you. You don't need to go through the above. Let us go to a combined one. I think that was for a trading account, which is the most important, because once you understand the trading account, these others is just a matter of adding other incomes, and then we subtract other incomes, we subtract less operating expenses, and we get the answer. Let me look out for a combined one. Somebody to read for me that statement too. I want the one who has not read, Lenny. Lenny?
Combined from the
Let me choose. Lenny?
I'm ready. Yes. The combined trading profit and loss account. The two statements can be combined into one statement known as the trading profit and loss account. It is also known as the income statement. An income statement is a financial statement prepared at the end of a trading period to determine the net profit or net loss suffered. While preparing this statement, as the trading account part ends with the gross profit, we just make a continuation and add income and gains to the gross profit acquired from the trading account, and then subtract the operating expenses in order to get the net profit, but without separating the two statements.
Thank you very much. So in an income statement, which majority have been saying, let us go to an income statement. We started by having that background, and we are saying, while you are preparing this income statement, the account part ends with the gross profit, just as we ended on gross profit up there. So if they tell you to prepare an income statement, we just combine and add their profit and loss so that it becomes trading profit and loss account. Now, on getting profit and loss, it's just a matter of adding their incomes on gross profit and then subtract operating expenses. When you get incomes and you add on gross profit, it gives us what they call gross income, not gross profit. Gross, it gives us what they call gross profit, rather gross income. Gross profit plus incomes gives us gross income. Then gross income, we subtract operating expenses, the expenses you incurred in generating that money. what remains is what we call the net profit. Meaning, an income statement is a combination of trading account and then a profit and loss account. And that's what we are going on. Is here. Somebody to read us an example. But not every time that these incomes have to be given, no. There are circumstances where you find incomes are not there. So that from gross profit, we go direct and less operating expenses. There, somebody was asking, can we have, let me see. Is it possible not to find return inwards? Yes, very possible. In fact, if you don't find return inwards, don't sales, take the figure to the last column and then you say less cost of sales. Even these carriage inwards and wages, in most cases, they are not given. So if they are not given, just get purchases, less purchases returns and get net purchases. If purchases returns are also not given, then just get purchases, add on opening stock, get goods available for sale, less closing stock, and you get cost of sales. So you don't need to cram the process, but rather the situation. How is the question saying it all? Mariam, you haven't said anything. Mariam, you unmute yourself. Okay. Your hand was up. So, Ratib, I also see your hand is up.
Yes. The following records were extracted from the books of traders as at 1st December 2013. Yes.
Good afternoon, sir.
I think let's start with Mariam because Ratib, your network is not steady. Let us go. Mariam.
Sir, good afternoon.
Good afternoon to you.
Okay. The following records were extracted from the books of Kalanzi traders. So are you getting me?
We are hearing you. You read. I think, Mariam, you have stopped reading, but we're hearing you.
The following records were extracted as at 31st December 2013. The following records were extracted from the books of Kalanzi traders as at 31st December 2013. Details, then the amount in shillings. Stock, 1st January 2013 was 8,000. Then stock at 31st December 2013 was 9,200. And then rent was 3,500.
Okay. You can continue.
Salaries, 2,000 shillings. Insurance, 2,800. Purchases, 45,000. Sales, 60,000. Office expenses, 3,000. Interest received, 2,500. Depreciation, 5,000. Sales returns, 10,000. Purchases returns, 5,000. Discount received, 7,000.
So thank you so much, Maria. They are now telling us to prepare what they call a trading profit and loss account, or what you call an income statement. We have been given all those details. purchases, sales, office expense, rents, interest received, depreciation, sales returns, purchases returns, anything received here is an income. In our solution here, they told us to prepare trading profits account. I don't know whether you're able to see the screen very well. The solution, Kalanzi's Kalanzi Traders Trading Profit and Loss Account for the period ended 31st December 2013. Somebody is saying I elaborate more on depreciation. It is pure an expense. Therefore, we shall subtract it from gross income or from gross profit to get the net profit or net loss. So we are starting with sales. Somebody to go through this table because I've talked the above. I want someone to go through this table by show of hand. I want the one who has not yet said anything. Antonia. Akos. I think she's not on or he's not on. Norris. Okay. Let me choose another person. Isma. You unmute yourself.
The table, I read.
You now teach us. Just teach us now. Because I've been doing the same. Now go through this. The information. These are the answers already. Now you try to explain to us what we are on by reading those figures. It's a trial. Nobody. We are just trying, and says it is through trying that you will be able to understand. Okay. Okay. Lawrence.
Yes.
Yes. Can you go through so that we are able to follow you?
As the table is
Okay.
details, amounts, 4 columns. We began with sales, which were 60,000 shillings. Then list the sales returns 10,000, and the answer we got was 50,000, and that's the net sales. And we post it in the third column. Then we went to, of course, we less the cost of sales from the net sales. But since cost of sales is also another process, we began with opening stock, which we had it at 8,000, and it's posted in the third column. Then we added of course, we add the purchases, actually the net purchases on the opening stock to get the goods available for sale. So we went ahead to add the purchases, but in order to get the net purchases, we also had the purchases returns, which were supposed to less from the purchases. And so it was 45,000. We list the purchases returns, which were 5,000, to get 40,000, which that are the net purchases. So we added the net purchases, which were 40,000, and the opening stock, which were 8,000, to get 48,000, and that's our cost of goods available for sale. So from there, we list the closing stock so that we get the cost of sales. So our cost of goods available for sale was 48,000. We less the closing stock, which was 9,200, to get 38,800, which is the cost of sales. So we proceed there to get the gross profit, whereby our formula for gross profit is net sales minus cost of sales. And this is done in the fourth column, whereby our net sales are 50,000 and cost of sales are 38,800. So unless we get 11,200, and that's our gross profit. And we add any incomes the business received to the gross profit so that we can get the gross income. I think that's where the screen ends. So the incomes. Can I proceed, sir?
Continue, please.
But there's that part of incomes is not visible. I think the previous page.
I thought you had finished on total incomes.
Of course, I have not yet read the incomes which were available.
Okay, I think it was an error. But the incomes which were given were, I think, rent received, and I saw there discount received, sort of that. So when we added those two, they gave us what they call total incomes. And total incomes, when we added the rent plus discount, it received gave us 20,700. Now, 20,700 when it is added on gross profit, that's what they call gross income, though they have not indicated it here. It is supposed to give us gross income. Then we less operating expenses. Now you can begin from there. We are now less in operating expenses.
But sir, I'm confused of here. The incomes and the gross profit, were they added before, or this total is just for only the total incomes?
That's why I'm saying that we may not follow so much the total. When we went to another page, I think some information got cut off. For us, let us follow the facts.
Okay.
The facts are, from gross profit, we add the other incomes. And the other incomes were rent received, plus I think discount received. When we add them, they are supposed to give us what they call gross income. But our gross income is not this 20,700. So you can just be going through these details column and you leave the
okay
figures.
So after getting after getting the gross income, of course we'll have to less the losses and expenses from the gross income, whereby we, as in the table, they say less losses and expenses, whereby the expenses, we had rent, which was 3,500, salaries 2,000, insurance 2,800, office expenses 3,000, rates 1,500, 500, depreciation 5,000, and those expenses were posted in the third column, whereby the total is then posted in the fourth column, so that it can be less from the gross income which we had calculated before. So the total for losses and expenses was 17,800, and when less from the gross income, the answer got is our net profit, which is 2,900.
Okay, thank you so much. Thank you for the good elaboration you have made. I think as of now, those who may want an exercise to practice, let me put it on screen here. Those who may want to write this exercise down for themselves to practice. And then I welcome some other few questions, either from here or in section A of theory. Then we summarize it up. Those who have questions, as others are copying this question, those who might be willing to practice. Okay. Okay, people are saying they need a PDF. You will find it in your WhatsApp group. I will post it in your WhatsApp group. But there are those who are not there, therefore they need to write this particularly. Then any question, either from accounting or the theory part, so that we summarize up and we call it an evening. I'm seeing Queen. Queen, your hand is up.
Okay, good afternoon, teacher.
Good afternoon to you.
So my question is about discount allowed. How does it affect the profit? Do we record it under losses or?
Yes, discount allowed is an expense to a business. Discount allowed means a customer came and bought from you, and then you reduced the price for him or her. That is an expense. Something you're supposed to sell at 10,000, you have reduced 1,000 and you have given it out at 9,000. That's called discount allowed. It's an expense. You have lost the 1,000. But discount received is an income. Why? I have gone to buy things of 1 million, and then they reduce for me as a business, they reduce for me 200,000, and I only pay 800,000. So the 200,000 they reduced for me is an income I have saved. That's called discount received. I've received that allowance. But allowed means I sold, and I also reduced for someone. Therefore, I've lost money. Discount allowed, in this case, goes into expenses. Any other question? We have here Prosper.
Yes, good afternoon. So
Good afternoon to
I
you.
was wondering if you could shed more light on what exactly rates are, because I get that they are an expense, but what exactly are rates?
Rates? Are you talking about
Yes.
rates?
Yes.
Okay, rates when they are given independently, they are an expense. If they are still combined with the rent and rates is still an expense. I think we all know things which are measured in rates. Things like water bill is in rate. I think even electricity is also, that yaka is in rate. So electricity is an expense, water is an expense. We don't have rates in transport. Rates are in these things which generate bills, like water bill, electricity bill. So they are measured in rates, that meter box and what. So it's an expense to a business. Then terms.
Teacher, my question is about the trial balance.
Yes.
So which items are not supposed to be put in a trial balance?
which items are not supposed to be put in a trial balance. Items which don't have permanent accounts, items that don't have permanent accounts, like closing stock. So we don't take closing stock into it. Then also adjustments, but now for you don't do adjustments at your level. Adjustments now were removed from the new curriculum and reserved for A level. So adjustments, they are not part.
What about, can depreciation be part if it's part?
Yes, depreciation is part of, it's an expense, and therefore in a trial balance, it appears on what? On debit side.
Debit.
Because yes, we debit it. All expenses are debited. Because remember, depreciation in a cash book, assume it is in the cash book, assume it would have appeared on the credit side. And all the things which appear on the credit side in a cash book, in a trial balance, they go on debit side, they go on opposite side, principle of double entry system. And whatever appeared on debit side of a cash book, they all go on credit side of a trial balance, so that they complete the principle of double entry, that for every gaining, there must be losing. For every losing, there must be gaining. Where we say that for every debit entry, there must be a corresponding credit entry.
Teacher,
Okay.
also, yes, teacher, I wanted us that we get some time and we pass through taxation calculations.
I think taxation calculations, the good thing I'm in your group. If you are in the group, perhaps we shall discuss it from your group that you formed, because we may not have time, given that majority of you might report to school next week. Okay, then we have Sandra. Okay, Sandra. Then Liz will be next. Then Coffee will be the third.
Good afternoon, sir.
Good afternoon to you.
Yeah, so I'm trying to ask whether, like, is there a possibility whereby they can give you one of the particulars as bank overdraft or bank loan?
Okay, it's very possible, because a bank overdraft is a liability, and liabilities are credited, and then a bank loan is also, a long-term liability, and therefore it's also credited in a trial balance. And bank loan and bank overdraft are used in the balance sheet. Don't bring them in an income statement. We use them in a balance sheet, where a bank loan is a long-term liability and bank overdraft is a current liability in a balance sheet. In fact, the only item which goes in an income statement and also in the balance sheet is the closing stock. The remaining are not shared. Whatever is in closing stock and in the income statement is independent. What goes in the balance sheet is also independent, apart from closing stock, which is shared in either way. Unless if we go into adjustments, but for you don't do adjustments. So for your case, the only thing which can be shared between the two is closing stock.
Okay.
We go to, yes, we have Liz.
Good afternoon.
Good afternoon too.
Teacher, where does the errors correction come in?
Where?
Where did the correction of errors come in?
Okay. Correction of errors come in when we have just finished ledgers. When you remember, these things flow in a logical order. That's why you cannot tell me that for you to have studied the ledgers when you haven't yet studied the books of original entry. You have to first of all study the sales day book, purchases day book, and return book, cash book, petty cash book. Then after that, we now generate what they call ledgers. Then from ledgers, we extract the balance brought down into trial balance. Now, when the trial balance, for example, refuses to balance, then there we shall go and look for errors. What has made this, or what has made this trial balance not to balance? So we generate it from there. Equally, we can go up to preparation of balance sheet, and then the balance sheet refuses to balance. Yet the trial balance balanced. The trial balance had balanced, but the balance sheet has refused to balance. It means those are what we call errors not revealed by the trial balance. The trial balance did not reveal them, and the things balanced. Now, when it came to financial position, which is a balance sheet, for it is refusing to balance. We go back and correct those errors. But now at your level, it's you cannot really prepare a balance sheet and go and correct errors. It's a bit advanced. Then we have, who else? Sandra. Sandra, your hand is up. Okay. I think Sandra is not on. So with this, maybe in the chat room, somebody's asking about NT group. I'm not the admin, but I think they will add you because okay. Okay, I want to close this session. Liz, I still see your hand up. Do you still have a close up? If not, okay. It's already 4. It's already 4. I really want to thank everyone who has spared his or her time and data to come and make learning continue, even when you are where you are in holiday. I think this could be our last lesson, given that some people are going back to school next week. I want to thank you so much, and I want to say, I wish you well. Entrepreneurship is one of those easiest subjects that you can easily get an outstanding from, and I really expect that with the time, you're not going to remain the same. With this, I want to call on someone to give us a closing prayer. I think I'll just mention your name here. ED, where are you? Give us a closing prayer. Okay, Trevor, please.
Okay. Good afternoon.
Trevor, unmute yourself. Okay. I think Trevor, unmute yourself before. Okay, Sandra, you pray for us.
Okay, let's humble ourselves for a word of prayer. Father, Lord, King of glory, call upon your name at this moment. Father, we thank you for the gift of life. We thank you for the gift of our friends and teachers. Father, Lord, King of glory, it was by your grace that we have been able to go through all these discussions, and just by the gift of the Holy Spirit that we're able to understand each and everything that has been taught. Father, Lord, King of glory, may we be able to acknowledge them in our examinations, and as we depart, may you be with us, protect us, and keep us always, Father, Lord, King of glory. We call upon your Holy Spirit to always be with us, protect us until the final day of our exams. I pray all this, trusting and believing in your Son, Jesus Christ. Amen.
Amen. Sandra, Thank you so much for the closing prayer you have given us this evening. Living is at liberty. I am now closing the session. I wish you success in your upcoming exams.